Nicolai Tangen, the CEO of the Norwegian Sovereign Wealth Fund, and today I'm here with Stan Druckenmiller, a proper legend in the investment world. Stan, what a pleasure to be here.
Happy to see you, Nicolai.
Now, what are the most important data you're looking at these days?
Currently?
Yeah.
Interestingly enough, I'm known as a macro investor, but I do our macro from the bottom up. So we're listening primarily to companies, and we're not seeing any material signs of weakness other than maybe in the housing market, but that's from a very elevated price level. So we're not seeing bottom-up information indicating to us that there's an economic problem anytime in the next 3 to 6 months. I would also say I'm revealing now that I'm more of a market animal than an economist, that we look at financial conditions. They've been very, very loose. I mean, they're as looser than they were when the Fed actually started tightening. They've tightened considerably in the last 4 or 5 weeks, ironically, ever since the Fed cut, because the dollar has rallied, and obviously interest rates have gone up, but they're still quite above normal. So that's pretty much the data we're looking at.
How big a problem is the budget deficit?
As a practitioner, it's something I can't be obsessed with on a 3 to 6 month basis. As an American, it's something I'm really obsessed with because debt to GDP can't go up forever. And to me, we have a reckoning, but I don't know how to time when that's going to take place. I will say that because the reserve currency, we've been permitted to engage in behavior that, say, the Brits couldn't have behaved in. There's a new term I have, getting Liz Truss. We haven't been Liz Truss because we are the reserve currency, even though if you look at everything we're doing, it's much more radical than the Brits were doing.
Yeah.
What's that old saying? How do you go bankrupt slowly and then suddenly? Running deficits with full employment, basically at 7% of GDP, is a recipe that can't last forever. One of the reasons we haven't paid for it is in COVID, the entire private sector, 80% of individuals refinance their mortgages, so the average mortgage rate is still under 4%, even though at the margin it got to 8%. Corporations termed out their debt. That stuff rolls over in 25 and 26. If we're going to have a problem, it's probably more like late 25, early 26, but you just don't know.
So how do you think the tech sector will develop? What kind of signs are you seeing there?
The AI boom is going unabated, Nicolai.
What is it that you look at?
Honestly, I've got young, really good analysts here.
Yeah, but a lot of people have a lot of young analysts.
Who are on top of things, and they started, we noticed about 3 or 4 years ago that the kids that go to Stanford and MIT, the engineers were shifting from crypto to AI. That was the first sign. Then my young partners started talking more and more about AI. I asked them how to play it. They mentioned a company called NVIDIA, which I thought was a gaming company I hadn't done work on in a long time. I bought a pretty good chunk of it, and then like a month later, ChatGPT happened. It was just total luck. I had no idea ChatGPT, but the AI drum around here was big enough, and the stock was down, I think, from 400 to 150 or something. So that's how I got started in it. Once we invest in something like that, then we really start to dig deeper, and then there was a whole chain of things.
When we last met, you mentioned the concept of buy first, analyze later. Tell me about that.
Yeah, Soros used to call it invest and then investigate. I think I just gave a classic example. I didn't know that much about NVIDIA. I just knew that AI, and I had some people here tell me how to play it. So we bought NVIDIA, and then we were in the process of doing a lot more work, and then ChatGPT happened. But I've always had the view that markets are smart, they're fast, and they're getting much more so with all the communication and the technology we have today. And that if I hear a concept and I like it, if I wait and spend 2 or 3 months analyzing it, I may miss a big part of the move and then psychologically be paralyzed. It's hard to buy a stock you're looking at 100 it's 160, even if it's going to 400, somehow your head is screwed up and you're waiting for the pullback. So we will buy something, a meaningful position, but not earth-shaking, and then really do the work. And if I think we made a mistake, I'll sell it. And if I don't think we made a mistake, we'll add to it if we have to.
Yeah. No, I happen to have worked exactly the same way in my life. It really focuses in your work and your efforts and your thinking. But have you always believed in your own pattern recognition?
Yes. When I started in the business, I got promoted too early. So before I had really learned the nuts and bolts of the analysis to the extent that I should have, I was promoted to a leadership position, and I had to rely a lot on charts, and I had to rely a lot on intuition. So what I learned from Soros is when you have conviction, you should bet really big. I know your listeners have probably heard it before, but probably the best illustration is the pound.
Yeah. So what happened? So let's go back. So you are in the office. What's happening in the UK?
The day, I believe, was September 15th, not that I would remember. I read the Financial Times, and the head of the Bundesbank, now I'm showing my age, but I'm pretty sure it was Tietmeyer, has written an editorial in the Financial Times, basically in more proper language, but he's basically saying that the Deutschmark and the pound should no longer be linked. So I decide to take Duquesne and the Quantum Fund to 100% long the Deutschmark, short the pound, because it's still 0.5% unbelievably. Now you're going to hear vintage Soros. So he happens to be in New York at the time, which he wasn't always. I go into his office and I explain to him why I'm going to 100%. And he had a rather large personal account. That's how we kept each other out of each other's hair. He traded that, and it was 95% overlap. Told him why I was doing this. And he had this unpleasant, puzzled look on his face when I'm telling him my thesis, that this one economy is booming and they need higher rates. This other economy is falling apart. They need lower rates. That these two currencies shouldn't be linked. And I'm thinking, what does he not understand about this? Because this guy pretty much understood everything. And he says, look, this is a one-way bet. They come along very, very rarely. It's ridiculous doing 100%. We should put 200% of the fund in this trade. So there you have it.
Now, you took a sabbatical in 2000.
Yeah.
What was the reason behind that?
It's a painful but really fun story. The fund is down like 17%, and Duquesne is down 17%. And I'm just exhausted. I've been running this high-profile fund for 12 years. So I sell everything out, everything of Duquesne, send my investors a letter and say, I'm going on a sabbatical. I don't know whether I'm coming back or not. You can take all your money out, but if you take your money out, if I decide to come back, I can't guarantee I'll let you back in. I think I had like 200 clients. One of them pulled their money. I remember who it was, but they'll remain.